Hi, I'm Damon Ficklin. I'm a senior partner at Polen Capital, head of our large company growth team in Boca Raton, Florida, and the lead portfolio manager in our global growth strategy. I want to spend just a few minutes to give you an idea of what Polen Capital is all about, to highlight the key elements of our investment philosophy, and to briefly explain how we execute our investment process. Polen Capital has a culture of delivering results and an inherent belief in going beyond what is expected for the people and the communities that we serve. Stated simply, we are passionate about our mission to protect and grow capital. There are three advantages that I'd like to highlight about our investment philosophy that I think will give you a good idea of not only what we believe, but how we're different from our peers. The first advantage that I want to highlight is concentration. All of our portfolios are concentrated. And in the global growth strategy, we're investing in what we think are 20 to 30 of the best, highest quality growth companies in the world. And we think concentration is an advantage from 2 points of view. One, from a returns generating perspective, and then two, from a risk management point of view. Not only do we believe concentration offers the opportunity for excess returns, we believe we can construct portfolios that are less volatile and that will capture less of the downside. At least that's been our experience historically. We also believe that our long-term holding period is a big advantage. So that's the second point that I would highlight for you. Our average holding period is about 5 years. And the important point underneath of that is we're not trying to generate returns through our activity. This is not a buy low, sell high approach. We are studying what we think are the highest quality growth companies in the world, paying fair prices, holding those businesses like a true investor, and letting the underlying earnings and fundamental results ultimately drive the investment returns. That's what we've achieved over the past 30 plus years, and that's what we're aiming on a go-forward basis. The third point that I'd highlight is I think we have an advantage in the way we put it all together to manage risk. To some degree, this comes back to concentration. We're not invested in our 50th, 60th, 80th best idea. These are truly our best ideas. So raising the bar really reduces a lot of risk at the front end of the process. I'd also highlight that we have a very high bar in terms of what we are looking for, and I'll unpack that as we go through the investment process. Let me take you through our investment process at a high level. We start with a very broad universe, but we can quickly and efficiently whittle that down to a much more manageable number of companies by applying the 5 investment guardrails that have been in place since day one at Polen Capital. What are we looking for? We're looking for companies with return on equity of 20% or greater, better than average earnings and free cash flow growth, strong balance sheets, typically high and improving margins, and then finally true organic revenue growth. Any one of those criteria would remove many companies from our purview. We're looking for all 5. So as I mentioned before, it's a very high bar. That gets us down to roughly 350 companies. And then to get down to our coverage universe, which is only about 100 to 150 companies, we're also excluding 2 classes of companies. 1, highly economically sensitive or true cyclical businesses. And then 2, businesses that we don't believe have sustainable competitive advantages. We're always thinking forward, looking at the next 5 years, not trying to time the market, but to own the highest quality growth companies over time. I should also highlight that ESG is fully integrated into our approach. We are not excluding companies based strictly on a third-party ESG score. Rather, we're thinking through the business models, thinking through the various stakeholders, making sure that companies are effectively managing ESG risks and also seizing opportunities to create more value. It's through the repetitive application of our investment process that the cream rises to the top and we're able to construct best-in-class portfolios.